three things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. The second plank is fair accounting. And then the third is
Saylor outlined three pivotal factors that could propel Bitcoin to a 100x increase in value from its current state. These factors are not just theoretical. They represent tangible steps that need to be taken within the financial and regulatory systems to fully institutionalize Bitcoin as a legitimate, mainstream asset. Saylor's insights provide a roadmap for how Bitcoin can evolve from a niche digital currency to a cornerstone of the global financial system. The first major factor Saylor highlights is the need for Bitcoin to be recognized and endorsed as an institutional-grade asset. This begins with fair regulation in the securities industry. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Three things that take Bitcoin up by 100x from where it is today. The first thing is to legitimize and accept and endorse it as an institutional grade asset. So fair regulation of the asset itself in the securities industry. And in January, we got the first installment of that with the approval of the spot Bitcoin ETF, but it was an incomplete regulation because the SEC still denies in-kind creation of ETF shares. And the SEC still denies the ability to trade options on top of spot Bitcoin ETF shares. And the acceptance was given grudgingly, it was basically, I did it because I had to do it, but I didn't like it, okay? So what's the significance of that? The negative opinion expressed when the approval came, that sits as a shadow over a lot of mainstream investors. We need to flip from a negative opinion to at least a neutral opinion. Like, why is it that a federal regulator isn't expressing an opinion that this asset is good or bad versus that asset? So I think that's got to change still. I think that the lack of in-kind creates and redemption means that it's a taxable event if I want to contribute Bitcoin or withdraw Bitcoin from an ETF. So if you were to invest in an ETF and it 10x'd and then you wanted to take your Bitcoin in self-custody, you're getting charged 30% of the Bitcoin. If you wanted to move the Bitcoin from an ETF to a bank or to another custodian, you're getting charged as if you sold it, even though you didn't sell it. So right now, there's a tax inefficiency, and that's hostile. Whenever you tax someone to vibrate remember when I talked about vibration and frequency? When you tax on the trade or on the transformation, you're hostile. You're oppressing the transaction. It's like you're damping the wave. So I think allowing in-kind creates and redemptions will be a big advance forward. When you allow people to trade options on them, you will eliminate or lessen the volatility and increase the ability to generate yield. And those two things are what you would expect in the maturation of the asset class as a security. So that's the first plank. I would say on a scale of 1 to 10 with regard to institutionalizing the asset, we're at a 6 there, and in terms of embracing. The second plank is fair accounting. Okay, if I wanted to keep you from buying anything, I would establish an accounting rule that said you can only lose money on the trade, but you can never make money. And that's a one-way ratchet. If I actually set up an accounting system where you always lose, you never win, and if you win, you have to act like you lost. And then if you lose again, you could win 99 times, but the 100th time you lose, you report one loss, no wins. Okay, that's just prejudicial and hostile. Okay, so indefinite intangible accounting allows you to lose but not win. And it's the kind of accounting you give to things you don't want people to buy. And so fair accounting was critical. And this January, it became optional. And next January, it will be mandatory. And so that's a big step forward. Let's just say we're 75% of the way along there, but we'll be sort of at 100% when you have 2 dozen or 3 dozen companies and they're all using the same fair value accounting and everybody's talking about it, and you start to see companies report multi-billion dollar or 10 mega-billion dollar gains on that accounting, right? That'll be a big deal. That's 2. And then the third is if individuals aren't allowed to self-custody, that's hostile to Bitcoin. If I pass the law saying you can't custody, that's an attack on Bitcoin. If companies can't self-custody, that's an attack on Bitcoin. If I had a company whose job was to sell custody services to institutions, if I provided custody to Yale Endowment or to a big hedge fund, and then if the government had a law that made it illegal for the custodian to provide custody for your asset, that's hostile. So right now, SAB 121 is a rule that basically makes it impossible for a bank to custody Bitcoin. And the right way to look at it is, well, that's basically a regulation preventing companies that want to custody from custodying. And so the result of that is you have basically the government saying, I guess you can buy the ETF, but the ETF is not allowed to use their bank to custody the Bitcoin, and they can only use a crypto exchange to custody the Bitcoin, and we're going to sue the crypto exchange. And so when you have the government hostile to the crypto custodian, hostile to the banks, hostile to the institutional custodian, you're kind of you're undermining the ETF industry, and you're undermining the asset.
The third and final factor Saylor identifies is the importance of legal and regulatory support for self-custody. Saylor argues that any regulation that prevents individuals or institutions from self-custodying their Bitcoin is inherently hostile to the asset. He highlights SAB 121 as an example of a regulation that effectively prevents banks from custodying Bitcoin, thereby limiting the asset's institutional adoption.
So the third plank is we just need for the SEC, the OCC, the FDIC to allow banks like JP Morgan and Citigroup and Goldman. But by the way, you might not like JP Morgan because of what the CEO has said. But let me guarantee you that within a year or 2 years of when it's possible to custody Bitcoin, JP Morgan will start a process to do that. And within 4 years, they'll be custodying Bitcoin because it's money, and that's what they do. So you want a world where Goldman Sachs, Morgan Stanley, Citigroup, JP Morgan can custody Bitcoin, because if they can custody it, they can buy it for you. And if they can buy it, they can sell it. And if they can buy it and sell it and custody it, they will give you a loan on it. And they will also give you yield on it. So the world after the banks can custody Bitcoin will be, I could have Bitcoin at a bank too big to fail, backed by $1 trillion balance sheet. They would give me 500 basis points of yield. You know how much money you get if you put your money in T-bills right now? You get 550 basis points risk-free. I think that the banks will give Bitcoiners 550 basis points risk-free when they can custody the Bitcoin. And so the world would be very different if you got paid 5% interest on your Bitcoin while you're actually holding the Bitcoin. And I think the other thing is they will give you a loan at SOFR which is 550 basis points plus 50 basis points spread. So you can get a loan of 6% from Citibank or Bank of America when they can custody the Bitcoin. And then the third thing is they'll let you post the Bitcoin as collateral against your house or your mortgage, and you'll be able to I think refinance your mortgage maybe to 100% loan to value or 120% loan to value by putting the Bitcoin as collateral. Like right now, if you go to some of these banks and you had a $5 million house and you wanted to borrow money, they might say, well, I can loan you 70% or 60%. I'll loan you $3 million against the house at the best interest rate. It used to be 2.5%, by the way. When I told people to take mortgages and buy Bitcoin, Bitcoin was $40,000 and the mortgages were 2.5% interest. I took infinite crap for that, by the way, infinite. Well, so you want to borrow the $3 million. What they would say is, I'll give you a loan for $3 million against the house, or I'll make the mortgage $5 million if you post some securities like Apple stock. If you want to post T-bills or Apple stock or the S&P ETF, they will give you a $5 million mortgage at 2.5% interest. And you could have done that with those institutional grade assets. Imagine a world where you can top up your mortgage with Bitcoin, borrow at 3 or 4 or 5% interest for 10 to 30 years, right? And what's the requirement? The bank's got to custody the Bitcoin. They got to recognize it as an asset that's just as good as Apple stock, just as good as a T-bill. And so I think, we're rippling where we get a couple more improvements on the ETFs. We'll be at 100%. A few years from now, we'll be at 100% in accounting, and people will be comfortable with that. Once the regulators, when they start to repeat what Robert F. Kennedy said yesterday and what Donald Trump said today, which is Bitcoin is digital property, Bitcoin is freedom, Bitcoin is virtuous, we're not going to sell our Bitcoin. When they say that, the banks pay attention. Okay, the banks, you got to look at this as the banks are looking to the regulator. The regulator is looking to the president, the administration. When the president says, this is sketchy stuff, it's used by criminals, the banks take that, and they pay attention. And you know what happens if you don't pay attention? The Signature and Silvergate Bank both actually were very pro-Bitcoin and pro-crypto, and they got out on a limb, and the regulators shut down the two banks, right? And so you can see why banks are conservative. You can see why public companies are conservative. The SEC, the CFTC, the OCC, and the FDIC matter. Political leadership matters. Rhetoric matters. So the words have changed. If Bitcoin is good for America, if it's good for the dollar, if it's good for the country's prosperity, if it's going to grow the economy, if that's the case, we're going to see all of those switches flip. Those all became catalysts. And now you have the 3 planks of institutional adoption.
Saylor predicts that within a few years, major banks will start custodying Bitcoin. And once this happens, the asset will be fully integrated into the financial system. This would create a scenario where Bitcoin holders could earn interest on their holdings, use Bitcoin as collateral for loans, and access traditional financial services while holding Bitcoin. This level of integration would be a game changer for Bitcoin, making it as accessible and versatile as any other mainstream asset. Please like and subscribe my channel.